Yeah, good afternoon and welcome everyone. Thanks for taking a few minutes to learn about Pathfinder and meet myself. I've been an investor, an entrepreneur with an RV background, both personal and now business now for over 10 years. I've worked with several different pubcos in the past in leadership management roles. When I had the opportunity to start Pathfinder, it was more than just a business opportunity to me. It was truly a passion project. So pleasure to share that with you all today. Thank you. Before I begin, I just wanted to point out that we have our recent news is that we have an open financing that we've just upsized from 1 million to 2 million. And I'll get into some more details down below. But Pathfinder, who we are and what we do is we are building on a $16 million portfolio of cash flowing premium branded RV resorts. We're led by a team with more than 25 years experience. We have a plan and a strategy to roll up the RV and manufactured housing industries, which is very ripe for consolidation right now. This is all much like the mini storage industry was 25 years ago. The problem is that there's not enough RV pads out there for short or long-term rentals. And there's on the other side of things, there's an extreme shortage of affordable housing opportunities. And I'll cover both of those and how Pathfinder can make a large dent in Canada's industries there. Both industries are multi-billion-dollar industries. The RV park space is 85% mom and pop operated. And through our research, we've identified a $350 million pipeline of cash flowing RV parks that are ready for acquisition. We're going to be honing in on Western Canada. Through our research, we've got a line of sight to $500 million worth of manufacturing housing developments over the next 2 to 3 years and so on. This is a long-term plan for us. However, we're getting started right now. Our business right now, we currently have 3 RV park locations and 1 manufactured housing location. We have a $3.5 million run rate. We have a $2.5 million market cap. And we have about a $5 million breakup value. So we are trading at 0.7 times price to sales compared to some of our peers that trade at 6 to 9 times price sales. We're hovering around an EBITDA break even. We believe this is a really good environment with interest rates coming down to create more leverage. There's no other public companies doing this. And so the opportunity right now is to get into our company at half of our NAV ahead of a major roll-up and growth strategy. And if we're right about these acquisitions, there will be significant leverage to get in front of the momentum, the scale, and the profitability that we're soon to achieve. So Pathfinder, we have 2 different verticals. We have our camp resorts, our Pathfinder Camp Resorts, which is a recreational business. We provide short and long-term pad rentals to in the summertime, a lot of families coming for a holiday. In the wintertime, it's a lot of snowbirds escaping the snow from other provinces. And then on the other side of the coin, we have Pathfinder Lifestyle Communities, which we've just recently announced. We do have 1 property that we're currently operating. It's a small manufactured housing community as part of one of our camp resorts on the island. But the Lifestyle Communities is very much a residential business for us. And these businesses, they go hand in hand because at the end of the day, if you take off the unit, whether that's an RV or whether that's a manufactured house, underneath is a pad with the infrastructure that we are experts at creating and operating. And so the next slide here, a little bit about our industries. It's very fragmented, like I mentioned. There is 85% approximately of all the parks in Canada and North America are mom and pop owned and operated. So what we do is we come in and we will introduce new technology, new booking systems, take advantage of social media marketing, and some of the marketing and some of the digital programs that we'll introduce are like dynamic pricing. So just like the airline, we'll offer dynamic pricing, which tracks the occupancy of the park. The price can go up and down based on the occupancy. and also site lock fees we've introduced, which are much like the airline, if you wanted a certain seat at our parks, if you want a certain site, you'll pay a site lock fee for that. So we can come in and at the end of the day, we're taking a park that's been run very archaically, not taking advantage of all the things that we operate. What this does is allows us to increase the occupancy at these parks. We can increase the prices because we're offering a better service. And then, as you can imagine, it'll increase the revenues and the margins, and we're creating value in our properties, and significant value in the increase in revenues, which translates to our investor base. Kind of the 4 growth verticals that we have is that, like I've just spoken about, the roll up in the development side of things, where we're buying an existing park and we're redeveloping it, and then we're increasing the efficiencies on site. That's probably one of the main ways in which we'll hope to grow. The second way in which we're going to be growing is through greenfield development. So the number one, the roll up in development does not really add any new sites to the system. The industry itself is short on pads, so we need to create new sites, new locations with multiple pads. Through partnership and management, number 3, we can operate parks that we don't necessarily own at this time. This is a good growth strategy for us. If a mom and pop was not interested in selling it maybe this year, but in the next 3 to 4 years, they wanted to sell it, we could go in there, we could operate it for them for a fee, and then hopefully with a right of first refusal, buy it later down the road. And then our 4th strategy on growth is to actually sell the units that we rent the pads for. So we've got partnerships in place with RV dealers where we'll be offering to sell the actual units to our customers. And then on the manufactured housing side of things, we are looking to get into the business and where we'll be able to control the manufacture, the sale, and ultimately be their landlords as well. This is a roadmap for our phase 2 of growth. You can see on the black pins that these are our existing campgrounds and RV parks that we have. The green pins represent a few in BC and several in Alberta. We're looking at an Edmonton area expansion. This makes a lot of sense for us to be able to get 3 or 4 more parks in a one cluster that will essentially allow us to manage them more efficiently and share management teams. So creating that cluster in Edmonton is part of our phase 2 growth. We're also looking at the Okanagan, and with a larger focus on Western Canada. This is our portfolio snapshot right here. Between the 4, so three operating camp resorts, we have a development project in the Soyuz, and then we have a manufactured housing community in Parksville. Company-wide, we have about 350 pads in our system. There's also an assortment of hard roof accommodations. There's cabins and tent cabins and some other structures that we rent out as well. But a combined value, management's estimate of about $16 million in value. I should mention that our Agassiz location was recently awarded 4th best location in all of Canada by one of the largest software providers. So it's an amazing accomplishment for us. And now we're looking to replicate that brand throughout. I spoke briefly about the Edmonton area. Basically what this represents is the opportunity to double our existing footprint. So like I mentioned, we have 350 pads in our existing system. This would be adding almost another 350 pads. Some of these parks that I have not named are under contract at our discretion. We're just currently doing due diligence on them right now. And it represents about a $20 million value. So this slide is our operating model. We have our ambitions is that we target $12,000 of revenue per pad per year on a rental basis. We on our short-term camp resort model, we're looking to capture about 35 to 45% margins, and we're charging about $60 to $80 per day. Throughout the winter for snowboards, we charge $700 to $900 per month. And then our seasonal stay model is much like our short term. It's just they pay more of a seasonal rate, and we're able to get away with higher margins. If the entire site was seasonal, we'd be able to have less staffing and a higher margin. So we do have in about 75% occupancy targets year round in our campgrounds. Now, one thing I should point out is that we look at our occupancy based on the entire year and not just our summer months. A lot of campgrounds or RV parks will just report their occupancy throughout the summer. We report year round because we are open year round. And we have one of the highest industry average occupancy rates in BC, as one of our Fort Langley locations is one of the busiest parks in Canada. This is our next, the next slide is what I'm really excited to tell you guys about. We've recently announced a new division that we'll be focusing on, known as Pathfinder Lifestyle Communities. We have one existing site that we've owned and operated for the last 3 to 4 years, and it's been at 100% occupancy. It's the residential situation. And you can see in this photo that this is a very, what we look to create is a modern RV park. As we move forward, Pathfinder really sees this as a big opportunity with the affordable crisis that's out there today. Everything is so expensive. The real estate markets are not really, prices aren't really dropping. And even if they did, the opportunity that we can provide to customers here with our strategy is going to be extremely competitive to the existing solutions that are out there. We look to add locations and the ability to control and sell the manufacturing of these housing units. Something that we're planning on having in the next couple of quarters. At the end of the day, we'd like to be landlords, and we see a huge opportunity in providing these units to Canadians. I don't need to get too much into the everybody. I think everybody knows these things about how expensive housing is and how expensive living is, but it's truly driving demand for future business and why we want to get into the manufactured housing community space in a much bigger way. The shortage of housing is not going away. And we see this as a really viable long-term solution to Pathfinder's business. And we've got a $500 million line of sight in the Okanagan that we're looking at right now. And what I mean by that is that there's many years of sales and landlord being a landlord there. So the next slide here is like I mentioned, you guys know all these things. We just see it as a really big opportunity that's really going to put Pathfinder into a different position. So this is a slide based on our financial projections. We have a great track record of having very predictable assets, stabilizing our RV parks to produce, like I said, very predictable revenues. So looking at 2023, which is our last full fiscal year, we about 3.4 million on our 3 parks. We're looking at 2025 as being a very large growth year for us, where we'll be able to at least double our footprint on the RV side and the manufactured housing side as well. Here's a slide of our cap table. We've got about a 20% insider friends and family ownership. I mentioned we've announced a financing, which is a 10-cent unit with a half warrant at 20 cents. It's good for 36 months. We've already closed $700K on our first tranche, and we've just recently upsized to $2 million. The use of the proceeds is for acquisition capital, ongoing expansions, development, and general working capital. Our corporate debt situation is that we have about $7.2 million in mortgages. We're a real estate company. There's conventional commercial mortgages in place there. As we get into a better interest rate environment, we really hope that we can refinance those at more competitive rates. It'll really reduce our debt servicing as well. Our cap table post consolidation is if we raise the full 2 million, we will have a 43 million shares outstanding roughly, including warrants fully diluted at 56 million shares outstanding. The average price of warrants exercise price at 20 cents. This is a comparison to some of our peers. Now, the good thing is that we don't really have anybody around our size that's doing what we're doing. Some of the big players in the space, which I'll call peers, Flagship, Equity Lifestyle Properties, and Sun Communities, they are trading at much higher price to sales multiples than us. As you can see here, Flagship's 4.7, Equity Lifestyle is 9, and Sun 5.2. These are all companies with manufactured housing communities, RV parks, and land lease communities. So very, very similar businesses to what we're doing. At 0.7 price sales, I think that what Pathfinder needs to do is to get some scale and some momentum. And I think I'm looking at 2025 as starting in Q1 as a big year for us. As we get into that growth, I think that we'll be able to demand a much higher price to sales ratio, like you'll see in some of these others. This is our team. We've got combined many, many years of experience, but most importantly, 25 years in operating RV parks. And now we also consider ourselves experts in operating the manufactured housing communities at a small scale, like we've done for the past 4 years. And, we are always looking to add more talent to our board as well. Recently, we just announced Keith Watts as a commercial real estate expert, and having sold almost $50 million in the exact units that we're looking to sell. So, the team there is very seasoned, and we're looking to really execute on this growth strategy. We've got quick summary of where we came from. 2020 is when the team was founded and company was positioned. 2021 is when we bought and started redeveloping our assets, and there was a go public in there right late 21, early 22. We've spent the last couple of years really stabilizing our asset base and developing our management services division, some of our expansions. We've also entered the RV community space, and we've launched our Pathfinder Lifestyle Communities brand. So that is it for my slide walkthrough. What I'd just like to finish with is that we see the manufactured housing community side of our business to grow significantly here with the situation that Canada's in. We've got an opportunity right now where we've got a great story to tell, and I'm going to go out and tell it. And right now we're at half of our NAV, ahead of a major roll up and growth stage. And so we hope that I've sparked some interest here with some investors.
Cool. A lot of questions, actually. First one's about the BC elections, and keeping up at night on this?
Not really. So good question. Like, we know that the NDP is very pro affordable housing, but regardless of who's getting put in power there, we've got a major problem in Canada with affordable housing, and it's the only solution is to support the companies that are providing solutions like ourselves.
Mm-hmm. The RV industry is certainly seeing quite a journey, right? Talk about like what COVID did to this entire landscape of camping, being outside, traveling.
Yeah, absolutely. So I just point out that the company with the inception, everything was pre-COVID. And then when COVID hit, honestly, no one really knew what was going to happen, right? And then it was, March, April, RV sales themselves, the sale of the units had just exploded. And I knew that it was a perfect time. It's a good business prior to COVID, but then what happened was just pouring fuel on the fire. RV sales went through the roof. there was already a shortage of RV parks before COVID. And then when a park's 100% full, it's not going to get any fuller when you have 1,000 more campers phoning you up. So it just added to the problem, which is a good problem for us. But since then, we've seen the RV sales really slump. To be honest, they came down. Our prices of RVs have come down, but we have not noticed any material changes in our business. The demand for camping is still there. One of the reasons why I truly believe that the manufactured housing side of things is going to be big for us is because we get calls every day for people wanting to live in our campgrounds. Over the past couple of years, 25% of all RVs have been sold to people that are looking to live in them, whether that's temporary or permanent, right? That's the housing problem that we have. So obviously we don't put people that are looking to live in their RVs on our Pathfinder Camp Resorts side of things. And that's why we created the lifestyle communities, so that we have a place for everybody.
A home for them. Yeah. You talk about innovations and technology. Like what does that mean, Taylor, when it comes to camping? Like how do you improve efficiencies there with technology?
Yeah, so I talked a little bit about software side of things. The future campers of the world, they want to be able to book on their phone. We've got all that. It's all mobile friendly. Like I said, it's dynamic pricing. So the price goes up and down based on the occupancy of our parks. There's just that side of it. On the side of it where the actual infrastructure of our parks and what we've done there is you look at what camping was 20 or 30 or even 40 years ago, when a lot of the RV parks were built. If you had an RV, it would plug into a 110 volt, like a regular office or home plug, and they might run a heater, they might run a microwave. Well, the technology in the RVs themselves have also come full circle. There's fridges on the inside, there's a bar fridge on the outside, there's TVs, HVAC units, ice machines and margarita mixers outside. Like everything you have in your house is taken to the campsite. That's the new modern camping, right? So what that means is that a lot of the old campgrounds, or the infrastructure isn't there to support that. You have more power requirements. So you're going from a 15 amp plug to a 50 amp plug. That's what we provide, 50 amp plugs at all of our campgrounds. You've also got an increased water demand and obviously an increase in septic demand, because people are having 3 showers a day in their RV, right? So these are some of the technology. There's not infrastructure improvements that we've done, and it's not just that, it's the Wi-Fi. It's one of the number one requested services at all RV parks is high-speed Wi-Fi. So
For sure.
camping's changed. We're investing in our amenities because we know that's what brings the guests to our parks.
Mm-hmm.
Not everybody's looking for a wilderness experience these days. They want to go to their RV pad. They want to stay connected. A lot of cases, the husband or the wife is working while the other half is with the kids at the pool. So it's a new world.
Yeah, right on. Yeah, I think COVID certainly changed that landscape for sure. I certainly enjoy being outside and going camping. And the BC system is you get that one weekend to book your trips for the rest of the year, right? And you can never find good spots. So congrats on all your success. Looking to see that financing close. You added a pretty big guy on the board last couple weeks, I saw.
We added Keith Watts to the board. So Keith comes from he's Kelowna based. He's a realtor by profession. He's got a lot of relevant commercial real estate experience that we hope to utilize. He's been involved in a lot of about $50 million in just one project of selling manufactured housing. So that's right down where we want to be getting involved with.
Yeah, awesome.
Yeah.
Well, thanks for your time. I'll look to see that financing close, and hope you execute well on your model.
Awesome. Thanks for having me.
Yeah, take care.